What's up, everybody? We are back. It's been a little while, but we are here with a new series for you. Episode 1 of what I am calling the middle class investor. And I really want to use this series to give full transparency to my own portfolio, hopefully give you a perspective on markets, investment ideas, how to form investment theses that you can use to help hopefully generate alpha and at least come up with some really interesting ideas when you're thinking about different equities that you want to invest in. I'll cover some options, current events, and then different software that analysts use to actually form investment ideas. So I'm going to make this, again, like I said, as transparent as possible. So I will show my Robinhood account near the end of the episode with my positions, and I'll try to explain why I am in some of those currently. A disclaimer, I cannot legally give advice yet. So please take everything I say with a grain of salt. Do your own research before you make any investments. I just want this to hopefully can help you find somewhere to start. And again, like my channel, what I have to say about these equities should be one avenue. You should be looking at a lot of different information sources to form your own research. But I will start by telling you really about some of the ideas that I have been watching. Just if you've been keeping up with the current markets, it's been a little bit of a wild ride, at least the last few weeks. The Fed, a lot of investors are concerned about rising interest rates and tech being really overvalued. We've seen a big correction happen in the past. But I want to really start with a few names that I'm holding right now and why I'm holding them. The first one is Carnival Cruise Lines. And this software that I'm using is Thinkorswim. A lot of retail investors, and I assume some institutional, but a lot of people use this really just for technicals and price analysis to view price action. So I'll be going into depth in how I use this in a minute. But really, why I'm in Carnival, my original thesis developed, I want to say last April or so. And I got into Carnival thinking, okay, cruises are going to come back. Arnold Donald, the CEO, has done a nice job of raising capital, so they can survive, I think, another year or so with zero revenue. I personally think cruises are going to come back before that in limited capacity. You've seen positive vaccine success and distribution. So a combination of those things led me to believe also pent-up demand. There's been even higher demand for cruises for, I think, the end of 2021 and into 2022 than before 2019. And those are the levels I'm taking because 2020, everyone's kind of just throwing that year out. It's really hard to compare metrics there just because of everything's very deflated due to COVID. So I got in around $20, rode this down to 12, hedged with options along the way, and have been riding it back up to almost $30 a share. I will say, one thing that's important to keep in mind when you're trying to develop investment ideas is if new information comes out that changes your investment thesis, you don't have to stay in. You can then you have to decide if that information is relevant enough so you lose confidence in or you want to make a change. The market overreacts a lot, and it's very short term in its view. So things come out that cause this to make some very massive moves, and you can take advantage of that as a retail investor because there are a lot of people that are concerned with whether the market's efficient, whether retail investors can have an edge, and in my opinion, there are places where you can find that still. So, and I'm an example. I got it in around $20 when people were very, very nervous around Carnival going bankrupt, and if they weren't able to secure funding and things like that. They ended up doing those things. Higher cruise demand. I want to reevaluate this at around $40 and go from there. Next up, Palantir. This is a really interesting one. I've done a lot of research on Palantir over the past few weeks, and just if you don't know what Palantir does, is they basically provide the infrastructure for other companies to better manage data. And that's a very unique value proposition just because they help companies make better decisions. From what I have gotten, they have two different software platforms, one to issue to the government and one to commercial investors, commercial businesses and organizations. And they don't do any of the actual, say, work. They install their platform and then customers use that themselves to make better decisions. So it's very hands off once it's installed, and it generates a lot of revenue once they're able to scale those accounts. So I think Palantir is very interesting to watch. They're led by Peter Thiel and Alex Karp, who are two very interesting people. I think their product isn't very known by analysts, and as that comes more into play, where the analysts start to actually recognize what they are doing and the actual total addressable market for Palantir, I think this thing has a lot of room left to grow. Their margins are super healthy. There's been a lot of negative connotations around this company for the last few months, and as you can see from the sell-off, I mean, they released earnings. I think things were good. Revenue grew at around 44% year over year, which is amazing. I think that's going to taper off, and management has hinted that that's going to taper off. But that combined with a lockup period, I mean, they IPO'd back in, I want to say October, and the lockup period just ended. So a lot of retail investors were very nervous that all of a sudden all of these people could sell their shares, and that contributed a little bit to the sell-off as well. Combined with just very high growth expectations. So I think the market's overreacting. It got caught up in the tech sell-off as well last week, or 2 weeks ago now. So I think their operating margin is around 80%, if I'm recalling correctly. And they're going to continue to scale their commercial division because I think government makes up more than 50% of their revenue at this point in time. But it's something to keep an eye on. I think they're going to do a great job diversifying. I can go more into depth about this Palantir case study that I've been working on if wanted, but it's another name that I've added to my portfolio. Got in around 2650, hedged some of my risk out. So, I mean, my cost basis is probably around $24, $25. And I'm riding this into a consolidation phase that it seemed to be bouncing at around $22, $23. And we'll see what happens. I'll continue to hedge. I mean, if this moves lower, I'll probably average down. If it moves higher, I'll start to sell some calls and hedge that way. But those are the two names. One last name I'll focus on that I think I found pretty interesting is 360 Digitech. And this is a loan servicing company headquartered in China. I got in at around $10, sold at 12. Kind of kicking myself right now seeing this run up that it had, but it's a really interesting company to watch just because their earnings numbers seem almost too good to be true. And I'll actually pull up FactSet, which I'm not sure if I could show FactSet on YouTube, but so be it. Here it is. FactSet's used by analysts to look at a lot of different financial data and to analyze companies very quickly. But it's very comprehensive. It's expensive software, but luckily my university pays for it right now, so I get to take advantage of it and show you all. What I noticed first about 360 Digitech, if we look at their financials, they generated around $2 billion in revenue in the end of 2020. Obviously, looking at this growth, this is exponential. And if we look at their enterprise value, they're only valued around $4 billion with sales of $2 billion. That really didn't make sense to me because I'm viewing this as a growth company, and apparently the rest of the market was viewing it as more of a value play. So I didn't quite see that. They were really healthy. They had really healthy margins. I don't think they had a lot of debt. Their PE was around 10, which was, versus the industry average is but I just saw this as a nice value play. Yeah, their EV to sales is two times, which is so low, especially for a growth company, or at least I think it's a growth company. Price targets around $40 back when this was 10. So that's an example of you can find value, you just have to look for it. The market didn't catch on until recently, and yeah, it's too bad I got out of my position, but I took a profit and no one ever went broke taking profits. So this is FactSet. I can show you more of this in the future, but again, one last name too that I forgot to mention. Celsai. This is a pharmaceutical company that I think develops treatment for cancer of some sorts. The only reason I'm focused on Celsai is because of this really high implied volatility, and I use this to sell a lot of options and generate kind of passive income on the side. That has its own risks, but I've been doing this since early December, and it's been going really well. Implied volatility, when implied volatility is high, that means option premiums are high. If you don't know about options, I recommend going to Option Alpha. Very great channel. You can check his course out or his videos and get a better idea of how to use them in your own portfolio. But I use them mostly to generate passive income on the side and to hedge different positions. But so I don't own the stock. I only trade their options. And I've been selling, like $7.50 puts, which that's the downside of, say, 50 or some percent. And I'm doing that on a month-to-month basis, generating a really nice premium. So that's been a good way to grow my portfolio. I'll probably continue to do that in the future and pick up some more on Monday since they actually just expired today. But I'll show you my positions. That's FactSet, and this is Thinkorswim. Again, I want to keep weekly updates on my portfolio so you can see what I'm trading, why I'm trading it. Those are the names that I am currently focused on now. You can leave your comments and what your positions are in the comments as well, and we can take a look at some of these companies if you want me to analyze any of them in the future. But I want to show you my Robinhood account lastly. We had a good day today. Everything kind of rebounded a little bit from the week. It was a tough week, but down 6%. But we've seen tremendous growth. Most of this coming from Carnival, and some of it from hedging Palantir and Sell-Side. I added some more money, so some of these numbers are kind of deflated. I'm really up, say, I don't know, over the year. It says I'm up 55%. That's probably more like 110%, actually. So really good to see. This is just because the past looks like this doesn't mean the future will. This portfolio could tank on Monday, and that would be the end of the series. But no, I in all seriousness, I want to show you red days. I want to show you green days. Here are my positions: 400 shares of Carnival, 800 at Palantir. I ended up hedging some of this Palantir risk out, so my average cost you can see was. Will it tell me? Well, oh yeah, 26.51. I sold some $26 calls right after I purchased this, so I made about probably $1,400 to $1,500 in just option premiums off of this position alone. And basically what that means is I'm renting out my shares to someone else and promising to sell them at a certain price. So worst case for me is, let's say I sell a $27 call. If this goes above 27, I have to sell them at 27. So my gains are limited, but I collect a premium in return. So yeah, I'm probably broke even on this position right now. And Carnival, I'm actually profitable on. Yeah, I got in at 2013 roughly, averaged up, I think. I got in at 19 originally, averaged up at like 21. So we're up 43%. This is a nice position. Again, I'm going to probably let this ride and start to hedge as this hits 30, 35. Those are my two positions. And then lastly, what else do we have here? I wanted to show my puts that I sold on. Yeah, so here, CVM. This is the really high implied volatility pharmaceutical company that I was talking about. So I sold some $7.50 puts, which means I'm promising to buy the stock if it goes below $7.50. It's currently at around 18. That implies a drop of more than 50%, and I'm being paid $400 to take on that risk. So that's a pretty big position. There's a lot of risk there if a major catalyst hits, but I'm willing to bet on the probabilities. And I'm definitely not a risk-averse guy. I like taking risk. I don't mind the uncertainty or the volatility. So that was a nice position. Captured around $400 over the period of 10 days, which is like 1.5%, which is really good. The S&P on average delivers around 10%, and you saw me generate that in around 10 days. I'll go over my watch list in another video, but I just wanted to make an intro video explaining my positions, why I'm in, what I'm in. So hopefully you guys can start following the markets and commenting or suggesting things that you want to see out of my series or what you're holding. So I think it'll be really exciting. We'll have this running probably once a week, and then we'll have Cap Lab continuing. I know it's been a while for Cap Lab, so don't worry. You should expect another Capitalism Lab video by this weekend, in the next few days. So I'm going to get this uploaded. It's Friday right now. Market just closed about an hour ago. Exciting things are in store. I hope you all enjoyed this, and I will see you next time.